by Michael Glaspie from Fayetteville, North Carolina. Super excited to have you on the show, man. And I don't want to introduce you as like Shelby's business partner, because I don't think that is a fair way to introduce somebody as like directly connected to somebody else. But you are the business partner of the very popular Shelby Johnson that we had on our show, I guess about a couple months ago when this one comes out. So welcome, man. Super excited to have you on the show. So I guess to give people a little bit of a preview, we're going to be diving into Michael's investment background. We're going to dive into his additional job that he has as a fractional CFO, which I'm super excited about. And as we found out before the show, we're actually going to be going into his $55 million tax fraud. That if you Google his name,
you'll find out.
No,
that's, it's like a not a really good one too, because the fact that you are like doing fractional CFO stuff, like you could like really draw 100%. The line to that,
and the fact that it was the $55 million on real estate at that. Yeah. So it was like
Can't get worse than that.
Exactly. Yeah, so just because that's a little bit of a joke we discussed before the show. If you Google Michael Glaspie's name, you will find an elderly gentleman that has been indicted for $55 million tax fraud, and there is no relation here at all. So don't let that affect your interest in Michael's CFO stuff that he does. So anyways, man, so people who haven't heard of you, let's have a high-level overview of kind of, who you are and what exactly your business looks like right now.
Yeah, absolutely. Thanks for having me, guys. So Mike Glaspie, no relation to the 72-year-old man with all that millions and millions and millions of dollars of fraud. So my high view background is I am originally from Texas, which is the greatest country in the world. I joined the military coming out of college, right? So as I joined the military, it took me all over the world. I had opportunities to travel to several different countries, and I was actually in it for 11 years. But at around year 4 or so, I had actually bought my first property, and I was house hacking. Had no idea what house hacking was at the moment. Had a couple of my single soldier buddies staying with me, really just kind of reducing that mortgage payment. Well, lo and behold, I started playing around with a ton of different things, and real estate just kind of kept coming back to the surface. And so over that time, I've been able to, at the height of my portfolio, I had over 134 properties. I've done subject tos, wholesales, syndication, wraparound mortgages, lease options, fill in the blank, and I've done a little bit of everything. During that time, you mentioned Shelby Johnson, which is my business partner. We actually met. So I had already been investing for a couple of years, and she had been a rock star real estate agent by the time that I met her. And that's actually kind of how we met. I was trying to get her to represent me on an investment property. Well, we started, clicking, and at that time, we found a really good opportunity to work together where we wanted to create a team of agents, and she told the whole story there with an investment focus, where I really brought in a lot of the investment side of the house, and she brought in a lot of the agency side of the house. And that company has now grown to, we're over 170 agents spread across the country. So that one is still up, running, and functioning. So during that time, we got that built out. I really focused on commercial real estate, and we can talk about that a little bit more later on, but the commercial real estate takes a lot of the emotion out of it, and it gets really down to the numbers and what are the results? And I really enjoy that part of real estate and finance. So I had also pursued my MBA at that time. And during this whole time, after building up a decent reputation within real estate, having the financial background, I got an opportunity to work as a CFO for a small private equity firm that focused on hotel acquisitions, Airbnb portfolios, things of that nature. And that's where I really found that where my interest all aligned, right? Really understanding the finances, looking at operational efficiencies. How do we improve profitability, right? Keep more of the money that we earn, and all within the realm of real estate. That led me to starting my own fractional CFO company that I have been running now for a little over 2 years. And it leads me to where we are today.
So a few questions here. Some of these will be a little bit odd, or people might think they're odd. So what did you get your undergrad in?
Business. Yeah.
Business. So business. Yeah. Okay.
Business,
not accounting.
It was general management with a minor in accounting, or minor in finance.
Okay. Then when you joined the military, were you an officer or were you enlisted?
I was enlisted.
Okay.
I was enlisted.
Now that leads to my next question. Why did you go to Ranger School? Like, for me, when I went to Ranger School, like that was required. But for you, not being an officer, but you were in special forces, most of those guys don't like to go to Ranger school after you've already put yourself through all that crap. Why would you do that again?
100%. Yeah. When going through special forces, I mean, we already have to go through a 3-week selection and then a 2-year training pipeline to even get the opportunity to be calling ourselves, a Green Beret.
Right.
So you're right. 100, I would say maybe 80% of the regiment, they don't want to go to Ranger school. They're like, why? You got the long tab.
Dude, it sucks.
Yeah. But it's something for me, man, because I didn't join the military originally with the idea of going SF. Right. I was actually an 88 Mike, and I was actually in an ROTC program when I joined. So I did the S&P kind of thing.
Gotcha.
And I had full intentions of commissioning, but after I had joined the Guard, I jumped out of went to airborne school and air assault school within like 8 months after I enlisted as an 88 Mike. At that point, I was hooked. I was like, what is the toughest things that we can do? And immediately, anybody in the Army knows one of the most coveted schools that you can go to is Ranger School.
Sure, sure.
And for me, that it stayed with me. It was kind of like always in my heart or whatever, all the way through. Even though I got the Green Beret, I was like, I still got to go. I still got to get that tab, man.
Yeah. Nice. What class were you? Sorry, Mike, this is probably boring to you. Sorry to our audience.
You're good, man.
What was your class? I'm just curious.
Are you talking about winter or summer?
Yeah. What year? What
winter.
month?
It was 2016, and
Okay.
I don't remember the months. It was definitely around. It was considered a winter class, but it was at the beginning of the winter when it didn't even get cold yet. So it was like one of those first classes. Yeah.
I'm just curious. So I went in 04, so totally different span of time here.
Oh, yeah.
I was seeing if we were close to it, if we knew somebody that went through. But anyways, we can go off of a different topic.
Literally like 12 years apart, Dan. Sorry.
A lot of years apart.
So, well, I mean, from what you've said, when you went to Ranger school, they were still trying to kind of figure it out. Like they were just like throwing you into stuff to see what would make you guys break. I imagine.
Not in Ranger school, maybe some other stuff, but like in general, in some other military, like early on in the war, right back in like 04, 05, when we were deploying, like things, it was the Wild West. But Ranger school is pretty much so figured out because that's been around since like Vietnam era. They've changed it a few times, and actually they've changed it quite a few times. But it sucks no matter what you're doing. Yeah, it's terrible.
It's a great time.
Anyhow.
Great time.
Yeah.
Plenty of Ranger school stories.
Right.
Oh yeah. Oh, I bet. Yeah. I know. You guys can start a different show.
Right.
Just talk about
It's called
Ranger
Ranger
stories
Stories.
and real stuff.
Yeah,
Ranger
just
stuff.
interview guests, all nothing but Ranger tab guys. And it's like,
Exactly. Man, that would get canceled so fast with the stuff that Dan says when no one's around. Let me tell you. But, no, of course, he would never do that. Dan's very PC. He's also the head of our HR department in our company, so he
exactly. Exactly. I guess the reason I went on that line of questioning though is because like that it just I think speaks to some of your background, Michael, because like it really is like if once you become a Green Beret, there's no incentive to go to Ranger school. It's just that's like some David Goggins shit, man. Like I'm just gonna go do it to get my ass kicked, you know what I mean? Because I want to, and you have a goal and you do it. And it's not an easy task to do when you don't have a reason to do it, right? You just did it from mostly just because that was your goal.
Yeah, 100%. And I've never been compared to David Goggins, so I'm going to take it for sure, right? But that's something. And I've been told this a lot by my fiance and by others. It's it's like, Mike, why are you doing it? Why are you going back and maybe getting your master's degree when you already run a successful company? And it's like, well, one, the military paid for it, so that was a very big incentive. But two, it's like, why not improve yourself in some area one way or another? For sure.
Totally.
Absolutely.
I mean, I will say, I think Dan kind of like gave you a slight compliment there. So you should be honored, Michael, because he doesn't do that very often.
Oh, yeah. I'm taking the David Goggins. As soon as we get out of here, I'm literally getting that tattooed.
Well, because he went to Ranger. Well, I guess he was kind of forced, he said, but he went to Ranger school too as a Navy SEAL. He had no reason. They don't typically do that. So,
yeah.
100%. Yeah.
Awesome. All right, let's dive into your fractional CFO stuff because I think that's something that is super, I would say like unique. I feel like it's a newer style business model. It's only been around for a couple of years and it's probably super applicable, especially to a lot of real estate operators out there. So what exactly is a fractional CFO and how is that different from just having like a bookkeeper or an accountant or whatever, a VA that like does your books shittily every month, right?
Exactly.
What do you do? What do you do that's different?
Yeah.
So what a lot of people don't really understand is there's actually two styles of accounting. You have your tax accounting and then you have managerial accounting. Mm-hmm. And so tax accounting basically says, what have you done? Let's react to what's already been completed, and then we're going to do our tax preparation or whatever we can do to help you pay less in taxes. Managerial accounting is saying, hey, look, this is what we're doing. What can we improve on so we can focus on our future, our forecasted profits and things of that nature? So it's two different styles of accounting. And a lot of times people will go to tax professionals, CPAs or bookkeepers, and they're expecting to get some sort of advice of what should I do in my company to improve my profits? Hey, is this a good real estate investment? Hey, even though I'm making $30,000 on this flip, is it actually worth it? Is there something else I should look at besides the dollar amount? And so that's where fractional CFO services kind of come into play. We step in and we actually do the coordination with the bookkeeper, with the CPA, but we keep the entire financial department on the right track, right? So when we're looking at taxes, it's not just what do we file for? No, it's what's the strategy that we can implement in 2024 and in 2025 to get us to our ultimate goal 5 years down the road. Hey, you have 2 or 3 different investment strategies. Well, let's evaluate all 3 of them and see which one's most profitable. Maybe we stop wholesaling and we only focus on wraparound mortgages or whatever the case may be.
Yeah, so it's almost like a strategy. So I guess like who's your sort of ideal client in this case? Is it like larger companies that are, I don't know, have like a bunch of different facets of their business? Are you like targeting people that have like just large portfolios? Are you targeting a person that flips 15 houses a year? I can't imagine that would necessarily be quite as applicable. Like who's your ideal person?
So anybody who has an established business, we can help. All right. Now, that's the very key distinction there. So typically we look for some key markers. You mentioned 15 deals a year. If that is the trajectory, that's the standard. We do about 10 to 15 to 20 deals a year. To me, that means you have a system. You have a system in place that can generate leads, get to the closing table, and produce revenue. Right. So that's kind of one of the metrics that we look for. There's a lot of people who said, hey, I've done 7 or 8 deals and maybe they made a lot of money, but it's not really a system. It's just them. They're just out there kind of flipping. And in those situations, we may not actually offer CFO services. We do offer bookkeeping and tax strategy services. So maybe that's more of a one-time deliverable type of conversation. But the CFO services are more in tune with people who have systems that we need to work on improving efficiency.
Makes sense. Okay. Yeah. This like, it gives me like, I don't know if it's good memories or bad memories, but when Mike and I first started, we didn't really realize it, but we kind of had like 3 businesses at least. We had our buy and hold portfolio, which needs a lot of people, like even if you go to a lot of accountants, like they're like, yeah, we don't really do real estate, right? Or they say they do real estate, but then they don't know. So we went through a few bookkeepers and accountants before we found somebody that can even help us from a tax perspective on our portfolio. But then we were doing wholesaling. We had a wholesale business. And then we layered in flipping, which you can kind of count as a third, but same as wholesale business doing its own thing. But then there's these opportunities where when you're flipping it, you carry it through one tax year or you keep it longer than 12 months. And now it kind of falls into a different category. And it was a mess. It was a nightmare. And we really struggled with understanding which levers to pull and when to pull it. Cause like just figuring out how to account for all of the income and expenses in the right way was overwhelming. Do you have any like, I don't know if it's stories or tips and tricks because I think a lot of people are in that situation. Especially in our network, they're investors and they're wholesaler flippers. Like, what do you see that you're like, hey, yeah, you should raise your hand. You need help, or what do you give them advice on those people because that they're probably struggling if they were like Mike and I.
Yeah, 100%. Your situation is extremely common. We see oftentimes people will come in, and I've got all kinds of stories. One of my clients right now, they do about $20 million in revenue annually. And this is consistently over the past couple of years. However, their net profit margin when they came to me was 1%.
Oh boy, that hurts.
1% at 20 million revenue.
Were they giving themselves fat salaries, or was it just
not even? Yeah, it's just the fact that everything was so convoluted and it wasn't being tracked accurately. They had multiple companies. They separated their companies by state, by asset class, by everything. And then they had a management company too. And they were just like, oh, we're going to move this here and do all this because it was advised to them by a tax, not a tax attorney, excuse me, a CPA, right? A tax advisor. Oh, this would be really good. Yeah. Then they heard through that tax advisor, oh, this is great for legal compliance as well. We'll be able to separate your assets and your liabilities. the biggest thing is when we get into these complex situations, if you don't have somebody who's laying out the strategy for you or walking you through these strategies, oftentimes, even when you set these up, it all falls apart because you do not know how to manage it. Right?
Yeah.
A lot of times when you have multiple companies, if you're moving, that's called commingling. You can commingle between your personal and the business or between two businesses. And those are the important things to know. So ultimately, the biggest tips that I put out there is, one, everybody needs bookkeeping, period, across the board. If you're not skilled in it or you're trying to learn it, don't do it. Get somebody who knows how. Now, here's the other thing, because you mentioned this. There's a ton of bookkeepers out there. You need a bookkeeper who understands real estate, because there's going to be situations where people are going to ask, well, hey, I'm doing these improvements or these repairs. Do I put them on the balance sheet or do I put them on the income statement? Right? Hey, when I sell this property, do I report the sales price or only what I received on the HUD? All of these things are important to know. And if you do not have it accurate, your chances of getting a loan goes down the drain. Right? What you're paying on taxes will always be inaccurate. You might be overpaying and never know it, right? Never taking advantage of those things. So all these things are important. But I think the easiest way to start is getting a bookkeeper who understands real estate.
Absolutely. Yeah. It's so funny, like too, so I learned through business school as well, like going to a lawyer, you're going to get their perspective. Going to an accountant, you're going to get their perspective. Going to a tax accountant, you're going to get their perspective. And if somebody doesn't know or have the ability to understand your entire goal and strategy, they're going to give you what advice they're experts in. And you should definitely talk to multiple people when you're doing these things and get multiple answers. And I think that's where working with a fractional CFO or CFO who really is looking at you, at your entire business and talking to you about strategy is going to help. One other point I was going to make too was like the bookkeeping piece of like, definitely I agree. Like Mike and I struggled with that for so long. And part of it was like, we were trying to bring it in house and have a VA do it. And which is, there's nothing wrong with that. And we actually have, one of our virtual employees doing our coding for us, but we pass it off to a bookkeeper now because it's just, for us, why do we want to become experts in that? We want to become experts at buying and selling properties. We want to become experts at flipping houses and wholesaling houses. Like that's kind of what I have found. That's not the only task in your business you should be outsourcing.
Yeah. Well, I think that's like an evolution that business owners have to go through, right? When you're starting a small business yourself, you think you have to do everything, and everyone, I mean, a lot of people
cost sensitive too.
You're cost sensitive. A lot of people never graduate from that. And that's why you have this like hustlepreneur culture where people are, working 100 hours a week. A lot of the stuff that they're working on, they probably don't need to be doing. Especially when it comes to things like their finance and their accounting. Like there are whole companies like you, Michael, that specialize in this, and if you don't need something as big as what you're doing, there's a lot of like smaller versions of it as well, whether it's a bookkeeping service or something different.
So I think it's really important for you said it perfectly. It's about the scaling, right? It's the evolution of it all. And so many times, and this is why, in my opinion, it's very important to have a total or a target, right? An end goal, something that you're actually working for, an objective. Because too many times we'll hear people say, I want 100 doors. Why? So they reach financial freedom. Where'd you get that number? Well, $300 of cash flow times X amount. That's how I need it. Yeah. It's like, all right, but that has nothing to do with how many people are you going to hire to manage this? What are you looking at for your time commitment into this? Who's handling your finances? Are you outsourcing all of that, or are you bringing that in-house, right? What else do you want to do with your life? And as you start to put those pieces together, the road becomes very clear of where you should move money, how you should scale, when you should hire somebody, what's going to be the most valuable use of your time. And as entrepreneurs, especially in the real estate space, if we're good at finding deals, we need to be spending all of our time finding deals, not doing the renovation, not doing the books, all of those other things. So I think you hit the nail on the head that a lot of people don't realize when they're ready to evolve, they also have to graduate mentally and be prepared to have those levels of conversation.
Totally. I want to pivot a little bit and ask you some questions about different metrics, right? Because I think that when you're talking about managerial accounting, like, our tax accountant is not telling us how to manage our cash flow, right? And not managing how to get a better return on our assets. He's really just giving us it's almost like a a play-by-play of what already happened from a tax perspective. And so Mike and I are actually knee-deep in trying to make sure we're paying attention to the right metrics in our business. Are there key indicators, and we'll just keep it isolated to flipping and wholesaling type businesses that you would recommend, and that you're basically, as a fractional CFO, you're helping them set up those key indicators, those KPIs from a financial perspective?
Yeah, absolutely. So one of the biggest things that we need to look at holistically as a company is the net profit margin. All right. That basically says, what did we profit compared to how much we've earned? And a lot of times people look at the net profit and only the dollar amount. Right. They also don't look at it from a company perspective, because a lot of times they'll say, hey, I flipped this property and made $20,000. I made a 20% return on this property. Well, now if we look at that on a financial statement, that $20,000 really and truly is our gross profit line, because now we have salaries and other expenses that we need to take into account. And so understanding our gross profit margin and net profit margin is very key. Now, when we think about this, gross profit margin basically tells us how efficient or how skilled are we at creating a product, right? How much time, energy, money we need to put into the renovations, the purchase, so forth and so on. So when we look at a wholesaling business, let's think about that. We're not purchasing the property. We're not doing improvements unless maybe it's a wholesale. So our gross profit margin should be high. It should be very high, above 80%. All right. Now, if we think about the flip, we got to purchase the property. We have to put in $50,000 to $150,000 of renovation. We have holding costs now. We have all these other things before it's ready to go on the market. So now our gross profit margin is going to be significantly lower. Right. So we need to understand that. By looking at, I'll give you, and then net profit margin, it washes out across the board. It shows us how efficient are we at making a dollar and earning a profit from it. So one of my clients, we'll use the same client as an example, makes $20 million a year. He came to me with a 1% profit margin. His gross profit margin was 10%. Gross profit. That means he spent 90% of all of that $20 million on purchase price, renovations, everything else. So if I was to ask you, hey, where's the first place we're probably going to look to improve this system? Where would you think?
I'm going purchase price if I can knock it down.
Yeah. How are we purchasing? What's our buy box criteria? Are we making smart decisions? Do we have no-go criteria? What are we doing with the improvements? Are we actually on a budget? Are we negotiating anything? Are we holding the contractor to a standard? Are we meeting a certain timeline? All of those questions become very clear that's where we need to focus when we look at the finances and we see these glaring disparities in certain key areas. So, I mean, those are just two main ones. I mean, obviously the list goes on, but that gives you an example.
Yeah. And go ahead, Mike.
I was going to say, just going through that, you can instantly think about all these different like influencers and business gurus you see on social media and realize they're all full of shit. They don't cover
I'm so glad you said that.
any of that.
Yeah. I'm so glad you said that, man, because right now the biggest push with and it's been this way for 2 decades, really. Yeah. But people and the gurus promote how to sell more, how to make more money. The way I look at it is, how do we keep more of that money? Because if you tell me you want $100,000 in profit every year, well, we could do that with $150,000 worth of sales if we just run it efficiently enough. We don't need $10 million worth of sales. So I'm glad you said that, because that's something that a lot of people don't pick up on, the sales versus just how do we be more efficient, man? How do we just keep doing what we're doing?
Well, just when the financial education and business education with the average person is low, I mean, it is complicated to learn, right? It's very easy to have someone that comes on and says, we did 10 million in sales last year. It's like, but what does that mean? You can do, like you just said, you had a client that did 20 million in sales and they were doing a 1% profit margin. It's $200,000 a year, right? Off of 20 million in sales. That's a lot of work for not a lot of money.
Yeah. And I think the challenge is as you start a business, you know your product or you know the service or you have the plan of what you're going to do. And generally speaking, a lot of us entrepreneurs, like we do know how to make money, right? But it's what you do after that to get to scale, right? Because you can optimize one flip really well without anything. You can just add up your receipts. You can look at your purchase price. You can say, hey, I need to reduce my costs, right? That's one isolated project. But what you can get into the cycle of is not actually knowing how much money you have, especially if you're managing I'll say it this way. And Michael, tell me if this makes any sense to you. if you're managing your P&L based on what's in your bank account, you're probably going to lose because you're going to say, I have money. Let's hire another staff member, or let's buy this. Let's do this. And really you're just sinking. Just because you have money in the bank account doesn't mean that you're helping yourself by doing these things. And you're really just adding that. You're making the expense portion of your P&L grow, and you're not really doing anything with the top line, which is just problematic.
Yeah, you're 100% right. There's a principle out there, a law. I think it's called the Parkins law, but essentially it says, like, if we have it, we will use it. And that's a human characteristic trait. The best example that I kind of always recall is, every single one of us has been on that one lane road before that we're just like, this traffic sucks. And so all of a sudden, what do? They build it out to a 2-lane or a 3-lane. And then as soon as construction's done, what happens? Traffic still sucks, right? Because if we have it, we're going to use it. And that's the concept around money. So when we look at managerial accounting, it's all in the word there. It's in how do we manage our money? How do we manage the money that comes in and goes out? Do we allocate a certain amount to new projects? Do we allocate amount to bonuses? Do we allocate amount for us to enjoy life? Do we reinvest some allocated amount towards new employees? The management is where the biggest mishap happens in small businesses. And if you just have a plan, budget, or whatever, all of these different things, well, then it takes out all of the guesswork of where do you move your money. Now, as entrepreneurs, we just focus on the deal. We just focus on how do we make money off this flip or this wholesale. Everything else becomes automated or systematized to make sure that your chances of mistakes are very slim.
Right. That brings me to brings up a good point in what I've seen and what I've experienced. Like, entrepreneurs and business owners, they are pretty good at a delayed gratification, right? Like, hey, I'm going to put some inputs into a business and I can wait. I'm going to make an investment in myself or my business. And I can wait. The problem with that is, and Mike and I see this with a lot of new folks coming into the industry, is they don't appropriately allocate profits to themselves. And so you could run a business for 3 to 5 years and go bankrupt basically and not have taken any profits or good profits from that business. Do you have a way in which you help entrepreneurs and business owners figure that piece out of, like, how they should be taking their profit and when and all that sort of stuff?
Absolutely. I tend to lean back on the profit first method. Profit first has been popularized by Mike Michalowicz. He's the one that kind of coined the term, but now there's profit first out there for almost every industry, to include real estate investing. And so there is a book called Profit First for the Real Estate Investing by David Richter that I do recommend the audience goes out there and reads. The concept behind it is it takes in a ton of different psychological impulses that we as humans or as creatures are accustomed to, and it allows us to put in barriers. So we talked about the principle of if we see it, we're going to use it, right? The other concept is the every dollar concept, which Dave Ramsey has made very popular. Hey, every single penny that we earn should be going towards a purpose. It should be working, not just sitting there. So we allocate certain money to pay down debt, certain money to go to reserves, so forth and so on. And then with the profit first, it's in the name, we focus on making sure that we allocate money aside for profits. Now, that profit distribution, there's a ton of different ways to look at it. This is what I like to use. We build up this profit account, and then once every quarter, we actually take those distributions from the profit. We split those profits 50-50. So let's say we got 10,000 in there. 5,000 is going to come to us as the entrepreneur to do whatever we want to do. We want to put a down payment on a Lambo. We want to go on a beach trip or whatever the case to Cancun. That's what that $5,000 go to. The other $5,000 goes back into the business. Now, where does it go in the business? That's all part of the strategy we have to develop. Maybe it's a reserve. Maybe it's a new investment. Maybe it's something else. But by doing that, two things happen. As an entrepreneur, we actually get to start enjoying the fruits of our labor, which a lot of us, like you said, are delayed gratification. We'll grind for 3 or 5 years and be like, man, I still don't feel like I made any money. It's because we never purposely allocated money to ourselves, right? Maybe just a salary to live, but not really purposely allocated. And then the second piece is it makes sure that we are investing back in the company for strategic growth, not just, oh, I got a gut feeling we need to hire somebody because I feel overwhelmed. It's like, no, man, let's look at the metrics. Do you really need somebody else? If so, let's move this money towards hiring somebody.
Yeah,
makes sense.
Totally. Yeah, that makes a ton of sense. So, use the profit first method. You go into a bunch of different planning things. So I guess bigger picture, what exactly does it look like to work with someone like you? What are like your main deliverables? Do you have a team? Are you coming in personally and you're just like engaging with the existing team? If someone doesn't have, say, a bookkeeper or a good accountant, are you providing that? Are you making connections? Like, what can someone expect if they were going to bring on someone to be like a CFO role?
Yeah, absolutely. And so every company is going to be a little bit different. My company personally is a little bit more inclusive, meaning that we do a lot more of the additional services such as bookkeeping or tax strategy and things of that nature. So really what it looks like is we start off with that introductory call. We get a good idea of where you are and where you're trying to go, right? We want to make sure that that's pretty clear and pretty outlined. Now from there, once we start the engagement, we're coming in and we're working with your existing team. So if you have a bookkeeper, if you have a CPA, if you have a VA, or if you have whatever is on your staff, we're integrating with you guys. We're coming in as your CFO to your company. And we take that role very seriously. The CFO typically is the right-hand man to the CEO. So we're going right in there. We're going to sit down next to the CEO and we're going to operate just that as a leader within the company. If our clients need help finding or screening or interviewing CPAs, bookkeepers, and things of that nature, then we absolutely help with that.
Okay.
Once we're in that role, we go into a full dissection mode. Like we're deep diving into every aspect of the finances. So kind of how I alluded to earlier, where we talk about gross profit versus net profit, we're looking for specific KPIs and see if they're out of whack. And then we're deep diving into those areas. So there's times where we're going to conversations about, let me see your SOPs. Let me see your process map. Let me see your buy box criteria. What's the script or the qualifying process that your sales agents have? Things of that nature. What are your chart of accounts inside of your financial statements? Does it make sense? Does it? Do you understand it? Hell, that's half the problem. If you don't understand it, we need to change it. Right? And so we go through this entire reformation process. So at the end of it, working with us for however long you intend, the idea is that your company's financial department has completely shifted. And now it's efficient. And now you know how to manage and operate it as you scale and grow.
Gotcha. So then working with someone like you or, the fractional CFO just in general, is it normally, I guess, like, are you on as like a salary? Is it a monthly subscription? Are you committing to a year? Since you said you're right next to the CEO, are you looking to take additional profit for the company as it grows? Like, what is that arrangement like? You don't need to give like specific numbers. I don't know how you negotiate that, but just like, what should people expect?
Yeah, 100%. So when you go to a fractional CFO, just in general, they're first going to do the analysis on your current situation. So just like you guys mentioned earlier, somebody who's doing 15 deals a year, maybe, and with lower profit margins, they're not even ready for like a full all entail. We're coming in, we're sitting in every week. We're, hey, move over. I'm going to run this meeting. They're not ready for that. We do offer that. But when we offer that, typically it's at a much higher level for a slightly larger company, and we're probably doing a percentage of the revenue or the profits that we can help generate. All right. As we kind of scale downwards, sometimes you'll see annual agreements or engagements or 6-month or 3-month intervals. But for the most part, you'll see some of these locked in at a monthly retainer. Right. So I'll give you an example of, like, for me, you can come in and we can work together for 1 month. But as we all know, this takes time to develop. So I always ask for a minimum of 3-month engagement. But our actual contracts are only month to month. So you can cancel at any time. Right. Most fractional CFO services are going to operate very similar to that, but there are going to be some who will put you into some sort of agreement just to make sure that we get the progress that we need to get, because it's not going to happen overnight.
Right. Yeah. And that makes sense. And that's like, that goes, Mike and I found that with our services in real estate, like, because we run a lot of services through our partnership program or even just through our coaching group. Like, people, I don't know if it's instant gratification that they want or whatever, but you can't do things in a month. You can't do anything in a month.
Nothing.
Right. You definitely can't improve your financial outlook for your business or build a good forecast that's even valuable in a month. Right. Yep. You really got to spend time, 3 to 6 months, I would imagine, to really let things marinate and actually see the progress and dive in and find the knobs that you need to be turning.
That's such a good point, because even if you just think about this, bookkeeping, how often do you get the finalized bookkeeping report? Once a month. You might be able to get it weekly, but now you're paying extra for that. Once a month, you're getting reconciled books. So before we can even make a change on anything that's happened, we have to see what happened that month. Then we got to know, hey, what's the pattern? So I can't look at 1 month. I got to look at 3 months or 4 months. So you're exactly right. It does take time. There is that instant gratification pool for a lot of entrepreneurs just in general. Right. But when we start thinking about how are we developing the company, how are we going to start treating our business like big business, right? But at our scale, we have to invest. We have to be patient with the intervals and understand that it could be a 12-month plan, 6-month plan, 2-year plan, 5-year plan, so forth and so on.
Yeah. Yeah. That fast gratification that people always want is just makes these things so challenging. So our main business, Michael, we run this, Stan mentioned the partnership program where we stand up and operate wholesaling operations for people. So basically they want to launch wholesale operation in Fayetteville. We bring the marketing, we bring the sales team, we bring everything. And then how it works is we basically charge a monthly fee, and then our team closes the deals and we ask for like a fixed wholesale fee for every deal. And then you get all the upside. You would be amazed at how many people are like established operators and come to work with us. And after month 1, we haven't closed like 3 deals. And they're like, I'm going to keep doing this.
It's like escrow process is 30 days, bud. Like, give us some time.
It's wild. And the thing is too, is like our monthly cost isn't like extremely over the top. It's less than it would cost them to have the team on staff that we have working. But just something about like when you're a service. And so like imagine for you as a CFO, because if someone was to hire a CFO, they're like, yeah, I'm going to give them 6 months to figure it out. They go and they hire a CFO service. They expect it to be immediate, even though it probably costs net similar or probably less than if they had a high level executive on staff, you know, and it's such a weird thing. I don't know. I think it's because like when it's a service, people mentally treat it like Netflix. Like they feel like they can sort of turn it off whenever. Yeah. But you know, that's not how any of these things work, especially in business. No, man, that's super awesome. So I guess what does your company overall look like right now? Like, are you taking on new clients? Are you trying to aggressively grow it? Are you working nationwide?
Yes. So we are working nationwide. Again, we focus on the real estate niches. So this is a real estate investor, real estate agent, property manager, contractors, things of that nature. We stick with the area that we really know and love. And we are taking on new clients. Yeah, we just actually brought on some more team members with the expectation of scaling in 2024. So absolutely.
Nice. Very cool. So so you guys are interested. You should definitely be hitting on Michael here, and we'll probably have a little chat with you after the show as well. Right. Awesome, Mike. Well, I really appreciate all the insight on this. It's super, super valuable. You know, and it's a part of business that I think gets butchered, especially by real estate people. And there's probably a lot of missed opportunity they don't even realize. We're going to start to wind down the show here. So we have our end of show questions, which are the same 3 questions that we ask everybody that comes on the show. Okay. And the first one, which is always the crowd favorite, and I'm sure you have some good ones as you have a decent sized portfolio. But what is your craziest real estate investing story? And this can be a big win, a big loss. This can be about the time that, you know, you had a tenant that went off the deep end and decided they were going to start raising capybaras in their living room, like whatever. Just your crazy.
Sounds like that was a personal story there. It sounds like that one is close to home for you. One of my craziest stories, I tell this one sometimes, but it was when I first started investing. And it was one of those situations where I'm a very logical thinking person. So I looked at this opportunity to wholesale a house, and everything just made sense to me. Numbers made sense. It should have been a good deal. So I was still active duty military at the time. So I go in, I'm negotiating with this individual, and she's like, I would love for you to sell this house. I'm tired of it. However, my brother's still living in it. And so we talked to the brother. The brother doesn't have a place to go. He's like, hey, look, I'm unemployed right now. If you kick me out, I'm basically going to be homeless in the moment. But if you can sell this, the sister promises to do something with this and give me a spot to stay. I'm like, all right, cool. So we go, we get it under contract. The brother moves out, everything. And all of a sudden, due to my profession, I get orders. We're moving out. We're flying overseas in like 3 weeks, right? So now I'm like, crap, I can't see this thing all the way to close. I'm about to deploy. I don't even know if I can close while I'm overseas, which, by the way, you can. I didn't know at the time. So what I did was I handed off the entire contract to another wholesaler. And I said, hey, man, you can keep all the profits, man. I just really want you to be able to close on this deal because now I want to make sure that they get, seen through, follow through. Mm-hmm. I deploy, I come back. I've been trying to hit up the seller and the other wholesaler to see what was happening. Nobody responds. I finally get in touch with the seller, and she's like, well, whoever you handed it off to never contacted me.
Wow.
My brother was actually homeless for about 3 months, and I ended up foreclosing on the property. At that point in time, it was like a dagger to the heart because I felt like I just completely ruined this person's life. Now, long story short, we amended that. You know, I was able to make it up, helping them out a little bit here and there. But that was one of the biggest lessons for me at the time. A lot of times as entrepreneurs, we come into something looking at the dollars that we can make. And that's the first real experience where I realized that we impact lives every single day within the real estate industry. So that's probably the craziest one that I had.
That's so understated right there. Is like people forget this in this business. They think about the money, but they don't realize, you know, getting a property under contract, people make life changes just like you would when you were selling your house. You'd be looking for a new place. You would be packing. You might hire a mover. You might put a deposit on a new house or an offer on a new house where you have, you know, earnest money that you could lose. And a lot of times these are people that, you know, they can't afford to do a lot of things, you know, unless it's the landlord situation where they don't really care about the property or something. But man, I'm glad you said that because all too often I feel like sometimes it's just Mike and I screaming that and nobody else talks about it.
Yeah. And it's such a problem right now too, like, because the new determination of what your business looks like if it's successful is, are you making money? And they don't actually look at the impact that you have with the people involved in your business or the people that you're doing transactions with. It's become super prevalent right now too, with like all the Pace Morby subject to bullshit, which I can't stand because you have all these people that do not understand the ramifications of those style of transactions. And you have them going and lying to the seller about the fact that the mortgage is still going to be on their name. And then they're selling it to some dipshit buyer who's brand new, who has no intention of being, who's not qualified, has no intention of being able to perform on the deal. And then all of a sudden you have the buyer that's probably overpaying for it. And you have the seller who's now going to have this debtor pursue them. And you have the person in the middle, you know, the Pace Morby shill that's like, peace, I got my $20,000. I'm out of here. And then they're going to go and talk about this deal that they just did and how great they are at business when they just screwed over everyone involved. Right. And in any sort of transactional business, this is a huge thing. And it is, you know, wholesalers get a bad rap, but really it can be a services-based business, even though people 100%. Don't believe it.
100%. I believe that we always operate in integrity, right? What you do follows you, right? It follows you, period. And there's a lot of people that have put a bad name on wholesaling, that have put a bad name on creative financing. And what's crazy is that if you just lead with value and you just operate with integrity, you know what? You'll never be without. You will never be without. Now, you may not be making as much as somebody else might be making in the moment, but I'm positive you're going to have more longevity than they will.
Totally.
Of course. Yeah. And it all just starts with intent and being willing to recognize that. So no, that's a pretty wild one though. That's a lot of good lessons in that. All right. So second question, what is the number one tip you would have for an investor trying to take their real estate business to the next level?
I'm going to reiterate this one. Bookkeeping. The real tip is track your money. That's the real tip. And so it's not only your money out when you're paying for marketing or paying for services, but the money coming in. Track to see where is it going. Are you spending it on gas station snacks? Are you spending it on things that are actually returning value or increasing your investment in the company? Just track it, because oftentimes when you track, what you track will grow, and people don't often track their finances enough.
Do you know why people don't track their finances?
Because they don't want to see the shit show.
So seriously, it's because it is really fucking depressing when you know that you just made $1 million and you realize that you're only getting like 20 to 25% of that.
Yes. Yeah. Right? That's a really good point, because a lot of time, money conversations here in America tend to be taboo anyway. But you know, now we have this comparison that has really been scaled up due to social media and everything else. And ultimately, that's why I think having an end goal, if someone came to me and said, hey, look, I need $5,000 a month because that will allow me to do X, Y, and Z, and that's all I really care about. Well, let's create that business. Let's not worry about chasing the Pace Morbius or whoever, right? Let's not chase that. Let's create that business, which changes the game about it gets rid of comparison. It allows you to comfortably or intentionally track your money. And it's something that's a little bit more tangible and bought into. But yeah, you're right. It's a very hard conversation to have when somebody pushes a lot of work in and then they realize that they didn't really keep much of it.
Yeah. It's a hard conversation to have with yourself. And then it's even worse when you see something like, David opens his toys on YouTube, who's like 9 and makes like $8 million a year.
So much money. Yeah.
And you're like, what is happening right now? I'm not doing something right. But,
golly.
Awesome. All right, Michael, last question for you. Where can people find you, follow you, and reach out to you?
Absolutely. You guys can find me on Instagram at michael.s.glaspie. You guys can also find me on YouTube, Michael Glaspie, the real estate CFO. That'll probably be the best way to reach out to me. And then you guys can go to the website as well, www.g2businesssolutions.com. But if you want to reach out to me directly, the YouTube and the Instagram is going to be the best way.
Perfect. Right on, man. Just shot you a follow. And we're going to check out your YouTube channel as well. So sweet. Right on, man. Well, thanks so much for coming on the show. That was a great clinic on
this is awesome,
real estate finance right there. Super, super helpful. And if you guys are new in your business or you are trying to figure out why your business isn't growing as well as it should be, you should probably go re-listen to this episode and probably reach out to Michael as well, because I guarantee you're not looking at your numbers as well as you probably should be. And doing so could change the trajectory of your entire business. So reach out to Michael. That's why people come on these shows, is because they want to engage with you. They want to get in front of more people. Michael seems like a nice, personable guy, but at the same time, he does this for a reason. He took time on his Wednesday night to come and, talk to you guys and give you guys information. So definitely let him know that you listened, reach out to him and let him know that, you love the information that he shared, and potentially inquire about his services as well if you're interested in that. So besides that, everybody, we appreciate you all and thanks for listening, and we'll talk to you guys next week.